Hello, and welcome to this demonstration of Dynamics 365 Landed Cost, one of the newest modules in the Microsoft Dynamics 365 Finance and Supply Chain solution. I'm Steve Stallings of Avantico, and I'll be your presenter for this demonstration. If you're interested in the topic of landed costs, then you probably already know that landed costs are those costs in addition to the purchase price of the goods from your primary supplier, and they include all of the other costs required to buy goods internationally, including brokerage fees, freight, insurance, documents, inspections, duties, and potentially several others, and we'll cover most of those today. Companies have two primary reasons for wanting a landed cost solution. From a financial perspective, landed costs represent a significant percentage of liabilities and commitments that are unknown until invoices are received for payment by those other service vendors. And from a supply chain perspective, the long lead times and the number of steps in the complex delivery process can adversely affect the reliability of product availability information in the supply chain. So we're going to jump here into the live demo and look at the landed cost workspace. And we're going to start off today by showing you some of the information that is available to users at all times. We'll start off here with estimates. And landed cost estimates here are based on created in advance of shipments. And in this case, you can see that item 30,003, 30,004 have their purchase prices and their estimated landed costs. And if we break those down in detail, we can see that those are made up of the bunker adjustment fee for both items, the duty, the freight, the insurance. In this case, you'll see that the bunker adjustment fee is applied at the voyage level. The duties are applied at the item level specifically, and the freight is an overall $2,000 divided $1,250 with the first line item and $750 with the second line item based on the apportioning rules that you predefine. And then, of course, there are insurance costs here, and there could be several other types of costs as well. The other side of the coin here from a landed cost standpoint will be the journey template. So let's take a look at that next. So we're going to open up our journey templates, and our landed costs are tracked based on the steps that we decide to include in a journey template. I can have multiple templates for multiple ports, and in this case we have one from Australia to Auckland, New Zealand. We're going to use one today from Shanghai, China to Long Beach, and that will have 4 steps: loading of the cargo onto the ship, the sailing schedule for the ship from China to Long Beach, the customs, and then the local delivery. And with that information, let's jump into voyage creation. Okay, we're going to start by creating a voyage from scratch, and you won't normally have to do that. In most cases, your voyage data will come in via an EDI transaction like an ASN, an advanced ship notice, or some other transaction from your vendor, your broker, or some other party. In this case, we're going to describe this as a voyage from China, Shanghai to US, Long Beach, and we'll give it today's date to define the voyage and describe the voyage. And we're going to skip over the booking reference and a couple of other details. We will give it a vessel ID. And we're going to go down and pick that journey template that we showed you earlier. So this is one of the most important things. This defines what we're going to be tracking. And the mode of delivery here is simply ocean. Shipping company, we'll define that as our vendor CN-004, which is different than our parts vendor. And we'll cover some of these other documents later. Okay, so we've created our voyage number 15, and now we're going to select the PO lines to add to that voyage. So I'm going to go look for our PO 426 here and select it. And then down at the bottom of the page, I've got 2 PO lines that are available to ship. But we're going to make the assumption that even though the PO is for 300 units and 200 units, they weren't all finished by the vendor at the point that this ship had to be scheduled to ship. So we're going to change the quantity from 300 and 200 down to reduce it to 300 and 180. This indicates that only 180 units of the second item were available at the time we had to ship these goods. And we'll show you the impact of this as we get into the demo further. Okay, at this point, we're going to add these to the staging list. And if we had more POs to add, we could do that at this time. Since we don't, we're going to go to our staging list and view it. And it's at this point in the process that we define the container. The shipping container that we're going to identify here, shipping containers are typically 4-digit alpha, 7-digit numeric, so we'll give it a unique container number. Okay, and then we're going to identify the container type. This is important because the container type identifies the capacity in both volume and weight. And we'll identify that the ship date was 2 days ago, since we're receiving this ASN notice today. The information was 2 days old, and we'll create it. Okay, and at this point we can exit from this page and go back, and at this point we would add any other POs and any other containers. We're going to leave it at this for now, and we'll save it and exit. Okay, let's refresh our list of voyages, and now our Voyage 15 shows up. We can open it up and we can see that the Voyage includes one container with one PO with 2 line items. And if we open up the PO and go look at it, we'll see that the PO has now not 2 line items on it, but 4. The original 300 for the first line, but the second line of 200 has been split from 200 to 180 plus 20 in lines 3 and 4. And the 180 made it onto our shipment and the 20 did not. So in this case, if we go look at the details for our landed cost for those lines, you'll see that there is no Voyage identifier for the 20. And if we switch to the line 4, the 180, there is a Voyage identifier for that. Switching up here to line 1, we can also see the Voyage identifier. So the 300 and the 180 are on our Voyage, the 20 are not. They're on a remaining open PO. Okay, now back on our Voyage, we're going to drop down to the container level, and we're going to start this demonstration by looking at the physical goods movement, and then we'll come back and look at the financial implications a little later on in the process. So from the container level of our Voyage, we're going to move to the General tab, and we're going to look at tracking. And what we'll see here is those legs and activities that we had in our Voyage journey template. And we're going to identify that the loading started on 5/26, and then we're going to update this form. And what you'll see, the system will use our standard estimated lead times to calculate the rest of the Voyage duration. So 1 day to load from 5/26 to 5/27, 24 days on the water gets us to Long Beach on 6/20, 3 days to clear customs, clears on 6/23, and the final 2 days for local delivery by truck from Long Beach to our warehouse changes the delivery date to 6/25. So this information is on the Voyage at the container level. We're going to go back now and look at our PO for updates. So we'll go back to PO 426, and we're going to go back to our lines that are on the shipment, and we'll look at our delivery tab. And you'll notice that even though the PO was originally created to be delivered on 6/15, it's now confirmed on 6/25 based on our updated delivery information. We can also take a look at our landed cost details. And we'll notice here that the landed cost is still listed as a confirmed PO line. Now let's go back into tracking again, and let's make a change. Let's say that the actual end date of loading was a day earlier than the 6/27 projected, and it also ended on 5/26. So we'll update our delivery dates. And as soon as we refresh, you'll notice that the 6/25 estimated end date changes to 6/24. So let's leave tracking and go back to our PO again. And take a look at our delivery information first. And you'll notice that the confirmed delivery date is now changed from 6/25 back to 6/24. So we constantly have updated information whenever we get any actual dates about activities on this shipment at any step in the business process. In addition, If we scroll over to our landed cost data, we'll now notice that the status has changed from a confirmed PO to goods in transit. So these goods are now loaded on the ship and ready to sail across the Pacific Ocean, so their status is updated to goods in transit. And this status will be updated automatically as well. So while those updates are great for the buyers and the landed cost personnel, there are other people in the organization that need to know about this status of these goods. So we're going to go ahead and apply our item and a Voyage type filter and add our Voyage 15 here to an inventory inquiry. And this will allow other users that aren't buyers or landed cost personnel to access the same information we're seeing. So we can see that these are coming into Long Beach. They're confirmed for the 24th. The voyage is number 15. Shipping container. They're shipping from China. They're sailing currently. They're due in Long Beach on the 19th. There's our voyage status, goods in transit, and all the other information about the PO lines. So all users, whether they're in or out of the purchasing and landed cost parts of the organization, can have access to this same type of information. Now, at this point in the demonstration, let's change gears and start looking at the financial implications of a voyage like this. One of the unique things about doing business overseas, especially in China, is that the point of change of ownership based on the Incoterm defines when invoices are due. So in many cases, customers end up having to pay for goods before they physically receive them. So with that in mind, we're going to take a look at the financial implication of paying for the invoice while the goods are still on the water and tracking the actual landed costs as they begin to occur. So we're back at the container level of our voyage, and we're going to switch to the financial impact of our landed cost scenario. So we'll move back to the container level. And then we're going to post an invoice for these goods, even though we haven't physically received them yet. So we'll open the accounts payable invoice. And the first thing you'll notice is we're defaulting from the ordered quantity, not the delivered quantity, since these goods are still on the water. They haven't been delivered to us yet. And as we look at this invoice, we have to put in an invoice number. And we'll just use INV0015 to represent our voyage. We'll call this the goods vendor invoice. And we'll put today's date on it since it's due today. Okay, now when you're looking at these line items, we cannot do a three-way match on them because they haven't been physically delivered yet. So if we try to do that and scroll down and take a look at the match status, they are not performed. They can't be matched. Goods are still not delivered. So at this point, we're going to go ahead and process our invoice. Again, can't be matched. We'll exit here, and we'll post the invoice for these goods that we own but haven't had delivered yet. Okay, once that invoice is posted, we'll go take a look at our PO again. So we'll go back to our container level, back to our PO, and this time instead of looking at the inventory statuses, we're going to look at the financial status. So we're going to inventory transactions, and we'll start at the summary level by going here to transaction details. And what you'll see is that this first item, which was about $30,000 worth of goods, has a now physical cost of $32,836 and change. And if we look over here at the right, we can see that about 2,200 of that is an adjustment based on landed cost. So that's the estimated landed cost that's been added to the $30,000 item. If we then go further into our settlements and look at the individual cost vouchers, we can see the four adjustments that have been made. Our $750 of duty applied to this item, our $105 of bunker adjustment fee that came from the voyage itself, our $1,250 worth of freight that was the apportioned amount for this item out of the $2,000 in freight, and $131 in change for insurance. So these are our estimated landed costs at this point in the voyage. Let's go a step further now and go back to our voyage and process an invoice by our freight company. So we'll go into our invoice journals, and we're going to create a new journal. Call this an AP invoice type, and we'll go to lines. And we're going to create an invoice based on very little information that we got from vendor CN-004, our shipping vendor. So we know his account name, we know his invoice date is today. We can put his invoice number, and I'll just make one up here today that looks a lot like our last one, but we'll make it a -2. And the description is simply invoice. And if you remember, the freight cost was $2,000. I'm going to put $1,900 in here to create a physical difference. And I want to do that to show you how discrepancies between estimated and actual landed costs are handled. Now, we might not have much more information on this invoice than this. We don't know the items, we don't know the PO numbers. Depending on what information was put on his invoice, that may be all we know. But we do have the ability to apply it based on what information he did send us. So by going to our voyage data, we can select the voyage number that was referenced on his invoice. And if it wasn't the voyage number, he might have referenced the container or folio or purchase order or any other data. We can use any of that to get at the right voyage for these goods. So here's our list of costs for this voyage, and we said this was freight, so I'm going to select freight. If it were freight and insurance, I would select both lines, and we'd have to distribute that $1,900 across two costs. In this case, we only have one, so when I hit distribute for this $2,000, we are only allocating $1,900 to freight. So we're going to go ahead and say, okay, that's correct. We're going to finish up on this page, and we're back at our invoice, which is ready to go with the exception of an approver. So we'll go to invoice approved by and enter a user. We'll just select Teresa Jane here as our approver, and then we'll go ahead and post our invoice. So now what we've done is we've paid for the actual freight in addition to our purchasing of the goods, and we've involved two different vendors. So this is finished. Let's go back to our PO. First back to our voyage 15, and then back to our container level, and finally to our PO. And this time we'll go straight to the financial settlement journals. So we'll go into inventory transactions, inventory settlements, and what you'll notice is the first 4 lines of our estimate are still there as they were originally, but 2 more lines have been added. And the $1,250 in estimated freight has been reversed out, so you've got a negative $1,250 on the 5th line. And the 6th line is the actual freight apportioned to this item, $1,187.50, which is this item's share of the $1,900. So keep that $1,187.50 in mind. We'll go check out the other item. So we'll check out the 4th item in the PO. Go back to the same settlement transactions. And here you'll see the other portion of the freight, $712.50, when added to $1,187.50 is $1,900. So that's the amounts of freight that were apportioned to each item on this PO in this container for this shipment. So what you're seeing here is that our financial values are being kept current each time we get new actual information, and that'll continue until all invoices have been processed. But finance needs to know about this information before those invoices come in, and they can always get at that information by looking at outstanding invoices that have not been processed yet. So here we're opening up that inquiry, and we can see here as we scroll down that Voyage 15 has bunker adjustment fees that are still outstanding. It has duty lines that are still outstanding, and somewhere down here, if we go far enough down, will be the insurance lines for that shipment as well. So that gives finance visibility of outstanding invoices before they've ever been processed. And then in addition, we can see the landed cost comparison of estimate to actual at any time as well, on a per unit basis or on a per shipment basis. So we'll look at the totals by shipment first. And here you can see, as we scroll down to Voyage 15, there we go. For the first item in the shipment, and then below that the second item, we've got 32,236 estimated and 31,187 actual to date, with 1 actual invoice processed and 3 invoices outstanding. And the same thing on the line below, 3 invoices outstanding, 29,232 versus 27,712 at this point. So this gives us a view of our estimated versus actual landed costs, and as we complete these actual costs, we can update our estimates to get more and more accurate information. With that, I'd like to thank you. That concludes our demonstration for today.